Hello, hello, hello. Hello to everyone out there. Happy 2022. Happy New Year to everyone watching. That is Corey Millsap, EA,
How's it going?
and I am Jarrell Duncan of Harvest Accounting Firm. We want to stop and take a little bit of time out from our busy schedule to help you guys navigate your way through filing your federal income tax return of 2021. So we're going to share with you today the news and updates that you need to know to feel comfortable and know exactly what you should be looking out and prepared for with your professional tax provider. The first thing you guys need to know is that tax season has begun officially as of January 24th of 2022. So if you haven't filed your taxes yet, then you need to rush into a trusted tax professional to get this taken care of for you. The next thing you guys need to know is that you have the new deadline this year of April 18th of 2022 to file your taxes without extension. Because of the Emancipation Day holiday in Washington, D.C., taxpayers in Maine and Massachusetts will have until April 19th of 2022.
Now let's talk about the standard deduction. So the standard deduction for taxpayers who do not itemize on Form 1040 Schedule A has increased. The standard deduction amounts for 2021 are for married filing joint or a qualifying widower, $25,100, which is an increase of $300. In addition, for head of household, the amount is $18,800, which is an increase of $150. And if you're single or married filing separately, it's $12,550, which is an increase of $150. On top of that, if you happen to be a taxpayer that is 65 and older or blind, if you're single or head of household, you have an additional $1,700 on top of your standard deduction, which is an increase of $50 from last year. And if you're married taxpayers or qualifying widower, then it's an increase of $1,350, which again is another increase of $50. On top of that, let's move on to the charitable contribution deduction. So for taxpayers who don't itemize, you may qualify for a deduction of up to $600 for married filing joint taxpayers and up to $300 for all other filers who utilize cash contributions made in 2021 to your qualifying organizations. Now, such qualifying organizations consist of churches, mosques, synagogues, temples, charities like Goodwill, United Way, Salvation Army, nonprofit schools, hospitals, veterans and certain cultural groups, and public park and recreational facilities. But that is not all inclusive. So make sure you do your research to make sure that the organization that you donated to was indeed a qualified organization.
Let's talk 2021 child tax credit and advanced child tax credit payments. We will provide a link below where you can check on the eligibility of your 2021 child tax credit and advanced child tax credit payments for your family. Were you one of the recipients of advanced child tax credit payments? Those who were will need to compare the amount of payments received during 2021 with the amount of the child tax credit that can be claimed on their 2021 tax return. There are two questions you should be asking yourself in reference to the CTC payments. Number one, how do I know if I qualify for and should have received an advanced child tax credit payment? You will want to know if you qualify for the advanced payments, and this is how you will know. To qualify for advanced payments of the child tax credit, you and your spouse, if married filing joint, must have filed a 2019 or 2020 tax return and claimed the child tax credit on the return, or given the IRS your information in 2020 to receive the economic impact payment with the non-filers, or given the IRS your information in 2021 with the non-filers, or lived in a main home in the United States for more than half the year. All 50 states, including the District of Columbia, do apply. Or a qualifying child who is under the age of 18 at the end of 2021 and who has a valid Social Security number, as well as someone who made less than a certain income limits. Please go to irs.gov to read more about the limits that it takes to qualify if you're under the age of 18 for the advance payments. The second question I would ask myself is, if there is a discrepancy where I owe or am owed more than the amount I receive, how do I collect, or how will the IRS get the amount owed to them from me? Well, those that receive less than the amount they're eligible for can claim the credit of the remaining amount. Those that receive more than they are eligible for may need some or all of the excess amount. The IRS will be sending out letter 6419 in January of 2022 to provide the total amount of advanced child tax credit payments that were received in 2021. The IRS urges taxpayers receiving these letters to make sure that they hold on to them in preparation for the filing of their 2021 federal tax returns in 2022.
Now, as Terrell mentioned earlier, let's talk about economic impact payments and claiming the recovery rebate credit. Individuals who didn't qualify for the third economic impact payment or did not receive the full amount may be eligible for the recovery rebate credit based on their 2021 tax information. You'll need to file a 2021 tax return even if you usually don't file to claim the credit. Individuals will need to know the amount of the third economic impact payment and any plus-up payments received to calculate their correct 2021 recovery rebate credit amount when they file their 2021 tax return. Now, in early 2022, the IRS will send letter 6475 that contains the total amount of the third economic impact payment and any plus-up payments received. People should keep this and any other IRS letters about their stimulus payments with other tax records. Individuals can also log into irs.gov or create an account on irs.gov to securely access their economic impact payment amounts. Now, when it comes to the recovery rebate credit, the third economic impact payment was authorized by the American Rescue Plan Act of 2021. And it was authorized as an advance payment of the 2021 recovery rebate credit. Now, eligible individuals who filed a joint tax return will receive up to $2,800. And other eligible individuals will receive up to $1,400. Now, those with qualifying dependents on their tax return will again receive an additional $1,400 per qualifying dependent.
There were other changes made in 2021 that will affect your federal tax return filing. Child and Dependent Care Credit. The new law increases the amount of the credit and eligible expenses for child and dependent care, modifies the phase out of the credit for higher earners, and makes it refundable. Child tax credit. The new law increases the amount of the child tax credit, makes it available for qualifying children age 17 rather than 16, makes it fully refundable for eligible taxpayers, and makes it possible for families to receive half of it in advance during the last half of 2021. Moreover, families can get the credit even if they have little or no income from a job, business, or other source. Prior to taxable year 2021, the credit was worth up to only $2,000 per eligible child. The new law increases it to as much as $3,000 per qualifying child ages 6 through 17 and $3,600 for qualifying children age 5 and under. For eligible taxpayers, the credit is fully refundable for 2021. Before the year, the refundable portion was limited to only $1,400 per child. The self-employment expenses. There is a temporary exceptions to the 50% limit on the amount that businesses may deduct for food or beverages. The temporary exception allows a 100% deduction for food and beverages from restaurants. The Paycheck Protection Plan, or PPP, loan forgiveness. Taxpayers may exclude from gross income any covered loan forgiveness. The Health Savings Account deduction. For 2021, the annual contributions limit on deductions for HSAs for individuals with self-only coverage is $3,600. This is an increase of $50 from the prior year. And $7,200 for family coverage, which is an increase of $100 from the prior year. This is an additional contribution amount of $1,000 for taxpayers who are aged 55 or older. The Retirement Savings Contribution Credit. To claim this credit, the taxpayer's Modified Adjusted Gross Income, or MAGI, must not be more than $33,000 if single, married filing separately, or a qualifying widower. This is an increase of $500 from the previous year. The MAGI must not be more than $49,500. This is an increase of $750, and this is for filing status of head of household. And $66,000, which is an increase of $1,000 if married filing joint.
Let's talk about the earned income credit. So the earned income tax credit for 2021 only, more taxpayers without qualifying children can qualify for the earned income tax credit. That's because the maximum credit is nearly tripled for these taxpayers and is for the first time made available for both younger workers and senior citizens. Another change is available for both taxpayers without qualifying children and families with qualifying children. For 2021, it allows them to choose to figure the earned income tax credit using their 2019 income, as long as it was higher than their 2021 income. In some instances, this option will give them a larger credit. So for 2021, the maximum credit increased to $6,728 with 3 children or more, $5,980 with 2 children, $3,618 with 1 child, and $1,502 with no children. Now, taxpayers will be able to elect to use their 2019 earned income to figure their earned income credit if their 2019 earned income is more than their 2021 earned income. Now, to be eligible for a full or partial credit, the taxpayer must have earned at least $1 but less than $51,464 with 3 or more qualifying children. That's $57,414 if married filing jointly. $47,915 with 2 qualifying children. That's $53,865 if married filing joint. $42,158 with 1 qualifying child. That's $48,108 if married filing joint. And $21,430 with no children at all, and $27,380 if married filing joint.
Changes expanding the earned income tax credit for 2021 and future years to come include singles and couples who have Social Security numbers can claim the credit even if their children don't have Social Security numbers. In this instance, they would get the smaller credit available to taxpayers without qualifying children. In the past, these filers didn't qualify for the credit at all. More taxpayers who also have investment income can get the credit. Starting in 2021, the limit on investment income has increased to $10,000. After 2021, the $10,000 limit is indexed for inflation. The previous limit was only $3,650.
And to repeat again what Jarrell said when it comes to investment income, Taxpayer whose investment income is more than $10,000 cannot claim the earned income credit.
Special rule for separated spouses. Taxpayers can claim the earned income credit if they are married, not filing a joint return, have a qualifying child who lived with them for more than half of 2021 and either live apart from for the last 6 months of the year, or are legally separated according to state law under a written separation agreement or a decree of separation maintenance and didn't live in the same household as their spouse for the end of 2021.
Now let's move on to IRAs and other retirement plans. So an IRA is an individual retirement account. So for 2021, the maximum IRA deduction increased to $6,000 and that's $7,000 if age 50 or older. If a taxpayer is covered by a retirement plan at work, the deduction for contributions to a traditional IRA is reduced and or phased out if the modified adjusted gross income is 1, more than $105,000 but less than $125,000 for married filing joint taxpayers or qualifying widowers if both spouses are covered by a retirement plan. More than $66,000 but less than $76,000 for a single or head of household, or less than $10,000 for married filing separately. For an IRA contributor who is not covered by a workplace retirement plan and is married to someone who is covered, the deduction is phased out if the couple's income is between $198,000 and $208,000.
We hope that the information that we shared with you today will help you in the filing of your 2020 federal tax return as well as state. Once again, if you guys do need help filing your 2021 tax returns, please feel free to click on the link provided so that we at Harvest Accounting Firm can help you with your tax preparation. Again, if you guys need any help, please contact Harvest Accounting Firm. Corey and I and team would love to assist at the drop of a dime. Thank you so much again for tuning in, and have an amazing and prosperous 2022.